Everybody hears me?
Yes, yes.
Yes,
So everybody hear me?
yes.
All right. So so I'm going to okay. Just start recording. Okay. Welcome to the session. Today is June 18th. So what I'm going to do today is show the difference between classic GL and new GL. Rekha should be joining too. She's not here. That's okay. Right, so I'm going to show you the difference between classic GL and new GL. What is classic GL? What is new GL? I think we talked about this quite a lot about, the history of classic GL and why there's a new GL and stuff like that. Okay, so what I'm going to do is I am going to make some postings, okay, in two company codes. One where the classic GL is activated, and other one where the new GL, sorry, classic new GL is not activated in one company code, another one where the new GL is activated. Okay, so okay, so this is the table. So deactivation of document splitter per company code. Okay, so basically that's a configuration. If we go to SPRO, okay, so now you're all very familiar how to go to SPRO. If you go to financial accounting, there's a financial accounting and there's a financial accounting new. Okay, so financial accounting new, which brings the new general ledger accounting to this world. Okay, it's called new GL. So if you open this, you will have ledgers. See, it's all new. Financial account global settings is new. General ledger accounting is also new. On the other hand, if you open the financial accounting, you won't see this. Okay, see, they are not new. So when you have new, the new financial accounting impacts general ledger accounting and the global settings. Nothing else. Even consolidation also it impacts. So the new GL accounting impacts global settings, general ledger accounting, and consolidation preparation. Okay, so this is, if you go to global settings, you already know, right? What are the global parameters in the company? Now, in the main thing with the new GL is ledgers concept. Okay, what are those ledgers? So in classic GL, you have only one ledger. Okay, you can post, when you post in the accounting, it goes to one ledger accounting. It posts to only one ledger. It posts to only one ledger. Actually, not even ledger. You don't see that's a ledger. It posts accounting. In the background, it's called 00, I think 01 or 00, but you don't actually see it. In new GL accounting, you can have multiple ledgers. When you post an entry into SAP, you can post into multiple ledgers. So what is the reason for multiple ledgers? Okay, why do you need multiple ledgers? In simple terms, they are called parallel ledgers. Okay, so in SAP, they got something called parallel ledgers. Why they get parallel ledgers? Just imagine the situation. The way you want to treat accounting in two different ledgers. Okay, why? Okay, the simple reason is it could be legal, it could be, it could be internal accounting, or sorry, it could be, let's say legal. It could be legal, right? We all know that there's a lot of accounting systems in this world, IFRS, US GAAP, and things like this. Okay, in IFRS has a different set of accounting treatment. US GAAP has different accounting treatment. So generally, we know that US GAAP is more liberal, okay, but IFRS is kind of more aggressive. They need all the details. When it comes to revenue recognition, IFRS lays lots of principles, but US GAAP, it's kind of liberal, okay. There is something called, why you probably know there's accounting treatments are different. That's why some companies they use US GAAP and some companies use IFRS and some companies they use both. The reason being, they have a parent company, let's say a company based out of Europe. Based out of Europe, they probably use a different accounting system, accounting treatments. Okay, not accounting system, accounting principles. Now, the same company is a group company. They operate in different countries. Let's say the company operates in US. They have to follow the US GAAP. Okay, they have to use the US GAAP. And why you have to create a separate ledger? Why don't you just use one ledger? Because, for example, depreciation postings, they have a special way of doing this. Okay, so so you can have a different depreciation method or depreciation principle that they can post to one accounting system. For example, US GAAP says, hey, you can depreciate this so-and-so way, methodology. You can have one ledger create and assign to US GAAP. And if IFRS says, no, you have to treat the depreciation differently or revenue recognition differently, you create another ledger and assign to this US IFRS. So that's called parallel ledgers. Basically, you can have multiple ledgers. So, however, there's something called leading ledger or non-leading ledger. So every system has to can have only one leading ledger, can have only one leading ledger, but you can have multiple non-leading ledgers, which is called parallel ledgers. So the source of truth will be always one, right? In financial accounting, there's something called source of truth. What is source of truth? Source of truth is where the accounting postings are originally come into, or where it gets generated. Because when it hits accounting in the system, when you post an entry or even write manually, you write only once. Okay, that goes to your leading ledger, which is called 0L ledger. Okay, now you can create additional non-leading ledgers and derive the postings. Okay, and derive the postings to other non-leading ledgers. Okay, that's all you need to know. Now, there's something called standard fields in a customer fields. Okay, this is new in the new general ledger accounting. However, what I'm going to do is I'm going to show you, see, define ledgers for general ledger accounting. This is the first configuration. Okay, if you go inside, so we will work on the company code today, I guess 1000. Okay, so this is where you define multiple ledgers. You can define multiple ledgers here. Okay, this is not company code specific. They are client specific. When anything that is not assigned to company code, it's called client specific. Okay, so again, I'm going to take some notes here. So that, okay, so difference between client specific and company code specific. So here you can create any number of ledgers you want. Okay, see 0D, 0L, 0M, 1D, 1L, there's a lot of ledgers they have created, correct? Now, there could be only one ledger that is called leading ledger, which is 0L ledger. Always 0L will be the leading ledger. So can I activate one more? I don't think so. Do not, let's see. See, it's a define exactly one leading ledger because your source of truth could be only one. Make sense? This is the first configuration, you do it. So in interview, they will ask what's the difference between classic GL and new GL. So the concept I was telling you is in new GL, come on, idiot. So this is called in new GL, you can have multiple ledgers. That's number one. And then you define currencies for leading ledger. Okay, if it's your local currency, let's say we're going to work on 1000. 1000 is Deutschmark, so D. And if you open this, you can have additional parallel currencies. So a company code can have 3 additional currencies. So company code can have actually can have 3 currencies. Okay, when you post into accounting, it converts, it translates to 3 currencies. Actually, translates to 2 other currencies. Your company code currency is always your local currency, so you cannot change this. See, it's not editable. Okay, the second currency could be different. It could be local currency. It could be group currency, controlling area currency. So a company code, which is this guy 1000, can have multiple currencies. Okay, great. now, so you can define and activate non-leading ledgers, but we already activated in others. We already saw this, how to create ledgers and activate one leading ledger. The next thing is assign scenarios and custom fields for ledgers. So what does it mean? Assign scenarios and customer fields to ledgers. Okay. So for example, take the case of leading ledger. So in what scenarios? In leading ledger, in what scenario? So, right, these are scenarios given by SAP system. So when I post some accounting document and show it to you, you will understand better. The scenarios are, you can do the cost center update, business area update, and profit center update, and segmentation update, and cost of sales accounting update, and all this stuff. These are the scenarios. These are standard. We don't create this. So profit center update is which commonly used. I'm going to select this and customer fields. If I click customer fields, there's nothing there. Okay. Maybe I use this is non-leading ledger. Let's put this guy here. Scenarios. There's nothing there. Let's see which one I can use. Export ledger. I don't think that is workable. There's nothing there. So let's say IL5 could have something. Okay, this guy here. I'm going to choose a profit center, customer fields. There's nothing there. But I can choose. So let's say leading ledger. US. Let's put L5. Scenarios. So profit center update, customer fields, nothing there. So create new entries. What is my receiver field? Okay, so we'll come back to this. Okay. So this is pretty much there's not a lot of configuration in UGL. Okay. Now when we try to post an entry, then we will see how it works. Okay. So so there's something called activate ledger. Oh, no. Something called activate company code. You can activate each company code, whether this company code is used for UGL or not. Okay, that guy should be somewhere here. Oh, not here. Document global parameters. Where I was. Some scenarios, ledgers, data global parameters. Did I miss that? Yeah, here. Okay, somewhere here. Here. See, activate document splitting. If you go here, you can activate the document splitting by company code, each company code. The splitting, this is a splitting method, okay, which is, we don't change it, okay, this is always the same. So activate, deactivation per company code. Here, these are inactive, okay, this is inactive. 001, the document splitting is inactive, which is not activated. New GL is not activated. 1000 is activated. Okay, so we'll work on 1000. Similarly, 3000. 3000 is not activated. So new GL is activated. Sorry, it's inactive, right? Which means this is activated. So we'll work on 1000 company code and see how this reacts. So let's do one thing. So we will do transaction in 1000 where the new GL is activated. And then we will also post transactions into some other company code. For example, our favorite 333 is activated. Oh, yeah. So let's work on this. Okay, 333. The new GL is inactive. Document split is inactive. In 1000, it is document splitting is active. So in new GL will work in 1000. It will not work in 333. Okay. So let's do this. So far clear?
Vijay, what is document splitting?
So I'll show you. So I'm going to post vendor invoice. Okay. in the company code 333. So here it shows 1000. Now you click here, it shows company. You can change the company code to 333. Okay, so vendor invoice, typically what do? You post an expenses, right? You post an expenses. So what I'm going to do is I'm going to find a favorite vendor that I can post to. So this is a vendor I'm going to post invoice. So I'm going to post amount 500. Now, so typically when I buy something, I'm going to post to an expense account, right? If you're doing a purchase order process, typically we don't post vendor invoice using this FB60 transaction code, right? And you know that everything has to go through purchase order. So I'm going to use electricity bills, one expenses, and I'm going to choose another expenses as well. Let's see. Let's say freight charges. So I'm buying from this vendor all these items, services. Okay. So I'm entering a vendor invoice because he gave me all this stuff. So which one I can choose? Maybe advertising. Great. So these are my expenses. So I'm going to split this 100, 100, 300. Okay. As you know, when you post the expenses all goes to your cost center, right? Expenses goes to your cost center. So I'm going to enter cost center here somewhere. So here. So 333 company code, I think it's assigned to the controlling area 333. Okay. So select a cost center. Hopefully we have, okay, 1001, 1002, 1003. Okay, let's choose this. I'm going to select 1001 for the first line item, 1002 for second line item, 1003 for third line item. And then, so this is good. When I hit enter, I will have the profit center also populated here. Where? Here. Oh, this also will populate. Hit enter. Warning message, warning message, warning message. Yeah, the profit centers are not coming here because I guess they did not maintain profit center in the cost center master, I believe. Okay, let's go and take a look at the cost center master, which is KS03, transaction code KS03. Hit enter. Yeah, the profit center is empty, which is not a good thing to do, right? I guess you can populate it. Yeah, so it's not there, which is not a good thing. This is probably not a good one to use. So. Okay, so I'm going to do what I'm going to do. I'm going to create some profit centers. Okay, I'm going to create some profit centers. So just bear with me. KSH3, I think KSH. So I'm going to create a cost. I'm going to create it, right? Create. So I'm creating a profit centers. So now when you create a profit center, it always creates an inactive status. Then you have to activate here. So I know some people have not done this before. That's fine. Don't bother. I create one. I'm going to create retail. I'm going to create retail. Let's say not retail. I'm going to say wholesale. profit center. So wholesale line of business, that's my line of business. Okay, person responsible, profit center group. I'm going to create the profit center group, same thing. Maybe I can use software business. Okay, now I'm going to save this. When I save this, it will save in inactive status. Then I have to click this guy and activate it. Okay, great. So I can create one more, right? Wholesale, retail, and distribution. Distribution, whatever. Then again here, I'm going to choose a profit center group, which is your hierarchy. Okay. Now when I hit enter, it is going to be saved. Then I will activate this. Okay. Now, since I created profit center, every cost center should have a profit center. So what I'm going to do, I'm going to assign whatever cost centers, whatever profit center I created, I'm going to assign here. Okay. So I'm going to put distribution. Now the second one, I am going to assign another profit center, which I created different one. Let's say retail. Yes. Now next one is, oh, sorry, 3. Change, and the 3. Here I'm going to assign wholesale, for example. Maybe remove this guy. Say yes. Now I did. So what did I do? I created profit centers and assigned to the cost center master data. Okay, now the reason why I'm doing is when you post anything to cost center, your profit center should populate. You should go to profit center. The whole purpose of new GL is profit center reporting. Okay, let's see. This gets populated or not yet. So I have to redo this. Anyways, I'll redo this. So vendor, I know it's 400. I put this amount 500. At least I know what GL accounts I was using. 492, 392, 707, I guess. Then it's in the memory. Put 100 and again 100. Now, so 1001. So everybody still here? Who's not sleeping?
Everybody is sleeping.
Okay. So everybody's sleeping? Good.
So you put in the cost center instead of profit center.
Okay, so what did I do was, now I put the cost center.
Okay.
Because I put the cost center here, now I have maintained the master data, cost center master data, profit center in the cost center master data. My cost center, I maintained it, and then my profit center is also populated. See? So they derive from the cost center master data. Great. Now I'm going to save this. So my document 2008 posted in the company code. So I'm going to display this document, which I'm doing now. So 2019. Okay, great. So this is the document I posted. So Deland Supplies is my vendor. Posting key 31, which credited my vendor. These are debit expenses. This debited my expenses. Okay. They posted a cost center and distribution profit and this profit centers. Great. Now in the classic GL, if I used 4.7 system, you would not see this general ledger view here. Okay. So if I click general ledger view, it is showing the same thing. Okay. Entry view is this. If I click entry view, this is what I entered in the system. This is what I entered in the system. That is why it is showing entry view. Entry view. If I click general ledger view, there's no changes, right? It's the same thing. So now here's the question. Now, if I run my profit center trial balance, if I run my profit center balance sheet, okay, if I run my profit center balance sheet, this 300, 100, 100 goes to the profit center, correct? If I run a profit center balance sheet, okay, this guys will go to this. However, my liability would not go to a profit center. Okay. My this in the classic GL, this is a classic GL, the 333 is not activated. The document splitting is not activated. In this situation, my 1000, the sundry creditors liability, it's not going to profit center, which means it is wrong, right? When I run a report, all the expenses will go to this profit center, but liabilities will not go to this profit center. So which means I cannot have a true statement by profit center. I cannot get a clear picture by profit center. Okay. Now on the other hand, let's keep the screen open. So I'm going to use company code 1000. Okay. So this is the one we just posted. Okay, so I'm going to post again, yeah, vendor invoice for a different company code where document split is active, and see what happens. So I'm using this vendor, this invoice date, doing the same thing. You put $500. Now I'm going to charge this to this expenses. I mean, I could select, but I was using this GL account, so I'm just posting to this. Okay, I can just find one more. 800, maybe not. Let's see. I'll post one more line item. Oh, there's too many GL accounts here. Okay, so this $500, 100, 200, 200. Okay. Now, as you know, when you post expenses, you all need, what do you need? When you post expenses, what do you need? What do you need to capture? Where this expenses should go?
Cost center.
Correct. So we should put this to a cost center. So what I'm going to do, I'm going to post a cost center. Let's just find a cost center. Company code is 1000. I'm going to use maybe carpet 110. Let's see, this can take then 1100 110 121. Okay, hit enter. Great. Now, because I put the cost center here, my profit center is also populated. However, they are the same, which I really don't like to do this. That's fine. Okay, so maybe I can use a different cost centers. Let's see, I can find something. What's the table for cost center? Anybody knows what's a cost center master data table? CSKS. Two, 4, 3, 0. I'm going to use 2430. The reason I'm using 2430 because it is assigned to a different profit center, 1460. Okay. And I'm going to use this guy 2302 because 2302 assigned to a different profit center, 1400. So I'm going to do this. Hit enter. Great. Now, if I look at the profit center here, they are different, right? 1460, 1400, 1402. Great. Now I'm going to save this. This document is posted in the company code. Now I'm going to display FB03. FB03. So this is the document I posted. Okay, posted the cost centers and profit centers. See here, this is the entry view. This is the document I posted. Now, if I click the general ledger view, see what's going to happen. Okay, entry view is this. How many line items are there in entry view? How many line items are here?
4.
4, right? If I click general ledger view, this guy becomes how many line items?
6.
6. So the line item 1, if you see line item 1, it's splitting. The $500, right? It is splitting to these 3 profit centers based on these profit centers. So here, now if I run a profit center balance sheet for 1460, I get these expenses. I will also get the balance sheet payables, the payables, right? If I run 1460 balance sheet, okay, I get this expenses, okay, in my profit center balance sheet. At the same time, I will also get, in the profit center P&L, it will go there. In the balance sheet, this will go. I'm sorry, 1460. This amount will go. So what happened was, now again, if I go to the entry view, this is the document I entered. This is the document I entered, right? The Sally Thompson, which is my vendor, payable, I entered only $500. Okay, because it's a payables, I cannot post to one profit center because, okay, I am buying for all the profit center. I incurred all these expenses to multiple profit centers. So, in generally, when you post to payables, you cannot split it. It all goes to one. You cannot put any profit center. Okay. However, which is the case here. I'm going to switch the screen and show you the classic one, which we posted into company code 333. Okay. This is the 333 company code I posted. No, not this one. Which is correct. This guy, which I posted to 333 company code, I guess. Yeah, 333 company code, which I posted. Entry view is this. Entry view is this. General ledger view is also the same. The sundry creditors is not splitting, right? However, on the other hand, this guy here in the company code 1000, where the new GL is activated, okay, 1000 company code. How do you know this is 1000 company code? Can somebody tell me, how do you know this is 1000 company code?
Right there on the top, document number, then company code.
Correct. So here it shows company code 1000. At the same time, here it shows the reference key as a document number, and then also company code followed by fiscal year reference key. This is a unique combination. Okay. Great. Now, if I click the general ledger view, this guy is splitting my payables account into 3 profit centers, 3 buckets. This is called document splitting.
Why take travel expenses payable? Like we assign that one, or like instead of vendor, like how we take that account?
This is the reconciliation account
So where we define this reconciliation account?
in the vendor master data.
Okay. Can you show that once?
So Sally Thompson. I mean, the description is wrong. Okay, it's misnomer.
Yeah, that's why.
Correct. That's a good point. So the vendor, if I click the vendor master data, just go to my accounting info, you will see this 176050. This is a reconciliation account they maintain.
Okay. The name is
The name is incorrect, yes. So I can change this 170050. And let's close this one of this. Let's close this guy. Maybe close this guy. Close the session. F00. GL account master data 1000. So if you go to control data, see it's a vendor reconciliation account. Okay. However, they named this travel expenses payable, right? It's payable account anyways, right? Now we do the general ledger view. That's a trade payable account. So basically, now if I run my profit center P&L and balance sheet, the profit center P&L, in the profit center P&L, this guy will show up. At the same time, this $100 will also show in my balance sheet. This is called document splitting. So again, entry view is this. This is the document I entered. Okay. Based on this proportion, okay, based on this proportion, it actually splits. So profit center is a huge deal in the new GL. So right now, lots of people use profit center for their line of businesses. Now they incur expenses and they earn income in the profit center. However, there's no way they can, show accurately on the balance sheet instantly. So document splitting will do this instantly. Now the question is then how they do it in classic GL. In classic GL, there are some month-end activities they have to perform to push this. Where is this guy? But in the classic GL account, in the classic GL, there are some month-end activities that you have to perform in order to push this entries, split the sundry creditors into different profit centers. So those are F.5D, which is balance sheet, payables and receivables. Evaluate F.5D. Calculate balance sheet adjustments. Okay, 333. If you do the 333, then it will split and post. It will split. After this F.5D, you do 1K EK. Transaction code 1K EK. If you do 1K EK, it shows all the company codes. You select 333. Okay, you select 333, then this will internally split this payables into 3 line items and post into profit center accounting. So that's not efficient, right? So you have to wait for the month end to allocate this process, and this is just this is not accurate. And then only you can do the profit center balance sheet. Now I can try to do this, but the thing is, you have to do this from the beginning of the year. Let's try. What? Why my company is not here? 33333. Okay. Page down. Page up. So I think somebody was activating, deactivating. That's why it's not showing up here. Okay. So then after that, you click your company code and execute. This guy will split your profit center. You split your payables into multiple profit centers. So this is additional sequence of steps that you do during the month end close, okay, which you don't have to do in your new GL. That's number one. So far clear? Anybody has any questions? Somebody dropped off, I think. Okay, the girl who asked the question, she dropped off. Okay, anyone has any questions? You guys wish you did not know this, right? You wish you never took this class, right? Any questions, Yamini?
No, Jay.
Okay, great. Now, what I'm also going to do, there's something called passive splitting, active splitting, and that's one more thing. Okay, great. Now, what happens if I make a payment to this? Let's say if I make a payment, okay, what will happen? If I make a payment, okay, this profit centers will also go to the bank account. Okay, right? Because now I'm making a payment, right? Now I have payables in each profit center. Okay, think clearly. So I have this payables, trade payable into this profit center, and again, $200 into this profit center. Again, this guy into this profit center. When I make a payment, I'm going to use one bank account, right? Because I'm not going to make individual payment, right? I will make one payment per transaction. Correct? Because see, end of the day, the payable, the invoice is only one. When I make a payment, I have to make $500. Got it? Come on.
Yes,
Right?
Vijay.
Correct. I can make only one payment. Now, when I make a payment, that will also split as per the profit centers. So that's all. It will also split as per the profit centers. So let's do this. So I'm going to this so far clear, right? So I'm going to make a payment. Okay. Vendor Sally Thompson. Entry view, general ledger view. Okay, entry view and general ledger view. Now, where this document I can see is this table, FA. Okay, in UGL there are two tables, very important. Okay, you still have BKPF and BSEC. Okay, BKPF and BSEC you will still have it, but that will show only the entry view. Okay, for example, if I go to BSEC table, BSEC is a line item table, right? $1,000, right? 2019. If I do this guy, it will have how many line items? We have 4. Right? It will have only 4 line items. However, when you activate new GL, there are 2 tables, they get populated. One is FAGLs. So you are clear, right? This document posted only 4 line items. In the new GL, there are 2 tables, FA, GL Flex A, Flex T. Flex T is a total table, T stands for total, A stands for actuals, FA, GL Flex. So what I'm going to do, I'm going to look at this document and see how this guy got posted. I think. See, the same document, it posted to multiple ledgers. See, 18 line items. Okay, so this is called parallel ledger. How did it post? How did it post? In my company code, I activated all these multiple ledgers. 011 is the leading ledger, and L5 and L6 is my non-leading ledgers. When I post a document, it all posts into multiple ledgers. Okay, look at this profit center. See, 176050. It's split. Let's look at $200, $200, $100, and $100, $200, $200. So this is one document, one ledger, 0L. Similarly, it posted to L5, it posted to L6, but also it shows your profit center in the payables account. In BSEC, I don't see it. In this table, I see it because the FAGL, Flexi, and Flexi stores this information.
Jay, I have one doubt.
Please.
Why it is showing 18 line items? I mean, 18 entries.
Okay, how much do you expect to see?
I mean,
so here, how many line items you see? 6, right?
6, yeah.
6. Okay, good point. 6 goes to your leading ledger, 0L ledger. But for this company code 1000, we have additional L5 ledger and L6 ledger. This is called parallel ledger.
Okay.
Okay, when you post to 0L, this is a source of truth. Okay, it will also post to multiple ledgers. In this situation, L5 is assigned to one accounting principle, L6 is assigned to one accounting principle, which I will show you now. So Hemant, good?
Yeah.
So we were looking at financial accounting, new, general ledger accounting, new, I guess, no, here maybe, go to ledgers, different ledgers for general ledger accounting. So this guy is posting to L5 and L6. Do I see it here? L5 and L6, please tell me yes. Okay. L5 is posting to International Accounting Standards IAS. L6 is a local. Okay, you define it. Okay, and why it's not posting to other, why it's only IAS and local? Okay, because we have activated
only those two
for the company code, specific to the company code. Okay, so let's say L6. L6 is 1000. Different settings, not this one. Not this one. Okay. 0L5. Yes, assign accounting principle to ledger groups. Okay, 0. So L5 is assigned to IAS and L6 assigned to the local. Okay, we did this. But the question is why it's only posting to those two ledgers, not the other ledgers, right? Let me ask, let me tell you, 2 minutes. Okay, I couldn't find that. There's a configuration where you maintain this. Okay, I'll let you know next next session.
Okay.
Okay. Now, however, now next thing what I'm going to do is I can make a outgoing payment for this. Okay, when I make an outgoing payment, let's see how the system behaves. Okay. After that, we'll be done. This is company code 1000. Okay, so I'm going to make a outgoing payment. Okay. What is the transaction code? I think F.53, I believe. Okay, so I'm going to post to one account, this bank account. Okay. So now I'm paying $500. Okay, that's a due. So account is 9006 is my open item. To Sally Thompson, this is the open item selection. Hit enter. So it's going to bring all the, we did this before, right? So I'm going to deselect all of these guys. Now I'm paying for this 500, which we posted today. Okay, I deselect everything else. And you guys know this, right? Okay, so amount assigned is 500, entered is 500. Now this is clear. I'm going to post. So this document 500212 payment document is posted. Okay, now if I go and display this document, okay, so I posted this guy. Now I click general ledger view. Again, this is posting to different profit centers. So basically, my payables also going to split into profit centers. Okay, my bank clearing account, which is a balance sheet account, also split into profit centers. Okay.
Yeah.
Now, how this magically happens, right? So there's again a configuration. I'm going to show you real quick here. There's something called classify GL accounts for splitting. Classify GL accounts for splitting, where you classify what GL accounts to be split and based on what. Are they vendor accounts? Are they bank accounts, right? You have to specify, which is somewhere classify GL accounts for splitting. Classify GL accounts for splitting, general ledger accounts. Where is it? Here, right? Yep. Okay. Classify GL accounts for document splitting. So what does it do? Okay. INT is my chart of accounts. Here you specify, right? What is my accounts? Okay, and use specific category. This is called item category. These are standard. You don't create it, you don't change it. So here, your chart of accounts is a group, right? They all group together to represent same account, same nature of accounts, right? So here you mentioned from this account to this account is my assets. Okay, and then similarly, this from this account to this account is my vendor. This account to this account is my vendor account. Now system would know, hey, whenever you post this account, we are classifying GL accounts for document splitting. Oh, this account is there here, right? As a vendor posting. So the document will split. Okay, so basically in your chart of accounts, you have to come here and specify, for example, cash account. Whatever account you specify, you have to mention here and then choose the item category. So system will know, okay, this guy is posting to the GL account. Now I have to split. See, revenue, material, balance sheet account, cash account, balance sheet account, all the stuff, it'll split. Okay. And another thing is, the last one is define zero balance clearing account. So what the zero balance clearing account is, you maintain one account, for example, this guy, accounts, you maintain this account, INT, zero balance clearing account. What happens is, because this is used in just in case if the document is not able to split properly, okay, there's a balance, okay, when this trying to split, let's say it couldn't find a profit center, Okay, if it did not, it's not able to find the profit center. Okay, what happens is it will leave this empty, but it will put to another dummy profit center using this GL account. This is called zero balance clearing, so that the splitting will happen. So if you write this down and think through it multiple times, then you will understand. Okay, for example, great, this found the profit center. Just in case this, when they're splitting, this is not able to find the profit center. Okay, it cannot leave it empty. Okay, so it will post to a zero balance clearing account, and people have to go and manually adjust this. So that's called manually. People have to go and make some adjustments. They can repost this to this profit center. They repost that from zero balance clearing account to this profit center.
So zero balance current that we have to create.
Yeah, you have to create a zero balance clearing account and assign this
Zero
to
balance. Yeah, this we have to create, right, in the GL.
Correct. It is it's a GL master data. You have to create it. Okay. The reason I say clear, if you go to FS10N, right, for example, if you do FS10N and run this GL account, balance 2019, there's no entry. However, if you run for, let's say 2006 here, let's run for 2007 maybe. And maybe 2003 maybe. Four. Right. So they always become zero. So zero balance account is always become zero. So that's not debit balance or credit balance. The cumulative balance will be zero always. Your zero balance account, clearing account should be always zero because it posted debit and credit entry where it cannot find the profit center. It cannot assign to the right profit center due to some master data missing, whatever reason is.
Jay, I have a question.
Yes, sir.
So this we need to define, like we are defining other accounts, right?
Yeah, you have to create. This is the GL master data. This is a balance sheet account. You have to create this account and assign this here. It's a balance sheet account. Okay, clearing with the business area. This is zero balance clearing account. I know this is a big concept. I kind of took an express train and, but this is a concept. You can try, obviously there'll be videos that you can try, do the same thing again and until you get the result. Then go through this configuration, which I mentioned, okay, one by one, watch the video and make sense out of it. And you can, think through it and ask me questions. So far, it's okay? Everybody's clear?
So far clear, sir.
Okay, so I'm saying that now you can use, 1000 company code and 333 company code. You can post an outgoing invoice for the customers and receive incoming payment, do the clearing. The receivables will also split to the multiple profit centers. Okay.
Yeah.
So this is called document splitting. So I try to over summarize today so that you know what it is, because obviously when you go study SAP, Google, you will find a lot of new GL material. Right, everything is new GL now, because it replaced the parallel ledger, and you have multiple ledgers, which is leading ledgers, non-leading ledgers, and you assign multiple accounting principles to multiple ledgers, so that it gets a different treatment it gets a different postings, different treatment. When the source of truth is only one, it posts to leading ledger. However, it posts to multiple ledgers and for different accounting principles. Okay, and there's something called scenarios, which I did not touch. Assign scenarios, ledgers, and all this stuff. basically for one ledger you can have business area, the other ledger don't have to have business area. One ledger can have profit center or segments, other ledger don't have to. You can rederive, you can put something else. All this fun stuff you can do. Okay, but I'm not going to cover today, maybe not in the future, but this is just a basic. The rest, you know, you can do you can look at the configuration, you can read the books, the training materials, you will understand. Okay. Alrighty. So the question here is, the assignment here is, I want you to guys tell me, send me what is client specific and company code specific. What's the difference between client specific and company code specific configuration? Okay, number 2, post incoming invoice to company code 1000 and observe. Alrighty, so this is the assignment, and then so let's meet when? Today is Tuesday. Saturday? Saturday morning?
Yeah.
Saturday morning, like 8 o'clock?
Yeah.
Kamal, you okay? Hitesh, you okay?
I'll be at work, Jay. Saturday and Friday, I have
Yeah.
long days, so
I see. Thursday, and every day a long day. Thursday, I don't think so. I can do it. Tomorrow will be too early. Thursday, maybe we can do Thursday, but 7 o'clock is too. Is it?
I mean Saturday, Jay, I'll just be
Yeah.
quiet. That's fine. We can do it. Just like today, I'll just be.
Okay. Then, anyways,
I mean,
hopefully you're able to follow and complete the assignments. That's good. So we will meet on Saturday morning, 8 o'clock.
Okay.
Alrighty, guys. Thank you so much. Have a good night. Talk to you soon.
Thank you, Jake.
Thank you, Jay. Bye.
Bye bye.